Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets and our co-host, the Governor of Quebec, Murdoch Capital Partners, and TAA Advisory, we're very pleased you joined us for our roundtable session. And before I introduce our speakers, a few points to note. Please submit your questions for the panelists in the question box to the bottom left of the slides. And all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome our moderator, Chris Berry. He's the founder of House Mountain Partners. And Chris and his panelists from Goldman Sachs, Long State Investment, and Resources Quebec will be discussing financing critical and strategic mineral opportunities. Welcome, Chris.
Thank you, John. I appreciate the opportunity and also want to welcome everyone who has dialed in today for what I think is going to be a really robust and interesting topic, or discussion, I should say, about the topic of critical metals and critical materials and how Quebec and, let's just say more broadly, Canada and North America really figure into this race that I think we're now seeing. And so again, just to, I think, reiterate, John, what you had said, thank you so much for the province to the province of Quebec and Murdoch Capital and TAA Advisory for really putting this together, because again, I think it's a really important topic that deserves a lot more discussion, and I think is set to get a lot more discussion and hopefully some results out over the next few years. And so really, before we jump into the panel and I introduced this really strong group of panelists, I was actually asked to help set the stage here as your moderator. And so what I'd like to do is just go ahead and do that with a few remarks about what I see sort of happening in the space and sort of what a path forward looks like, not just for Quebec or for Canada, but really the West in general as we build out these critical minerals supply chains. So maybe to start off, look, we've been through an eventful 4 years with the boom, bust, and recent boom again in battery metals. And while it's important to remember that it's never different this time, I do think that we're actually at an interesting hinge in the electrification thesis. This hinge is important for the province of Quebec in particular in several ways, as the battery metals markets mature and only increase in their strategic importance. And so I think the factors to focus on, I'd like to focus on a little bit today and then going forward, are geopolitics, supply chain decoupling, and ESG. We're hearing a lot about all three these days. So first, with respect to geopolitics, I think, as I mentioned earlier, this is going to play an increasingly important role in the global race to build out electrification supply chains. I mean, I think we're all in agreement on that. The line between economic security and national security has really been blurred here in the West, perhaps permanently. I think an increasingly assertive China has to date flexed its muscles mainly through its checkbook, encouraging outward-bound economic development through the Belt and Road Initiative, as well as some other ways. And much of the capital invested in lithium development in particular in recent years has come from China in the form of equity, debt, or offtake agreements. And so this supply, it's important to remember, has been locked up. That is going to end up in China to help build out their industrial economy. So concerns, I think, around direct or debt trap diplomacy have really actually served to halt some of this initial progress made in the early days of the BRI rollout. But with respect to battery metal supply chains, China is well ahead of the rest of the world. So that is what we face here in the West. I think the pendulum has probably swung away from a more globalized or a flat trading system. And it appears that a Biden administration here in Washington, D.C., where I live, is not going to change course from the previous administration's approach to China. So a lot more, I think, competitive tension is what we're facing out of the next few years. The meeting between the United States and China recently in Alaska did not go as well, I think, as either side likely wanted to. And so more of this same tension is arguably going to be expected. The isolation of China, or the surrounding of the country by democracies, which I think is the point of the Quad, Australia, Japan, India, and the United States, I think is a real theme that you're going to want to pay attention to closely. But it's also an opportunity, I would argue, for Quebec in particular to exploit its advantage as a top-tier, low-cost supplier of critical materials such as lithium or nickel. So if a rising China is less willing to play by global norms, I think this raises a question which leads to the second factor I mentioned earlier. And so is the decoupling or the regionalization of supply chains, is this the next logical step? In other words, is this a foregone conclusion? I think an interesting side effect of COVID in particular is the focus on selective decoupling of supply chains and just the general pushback against Chinese dominance of battery metals. That's been a huge change that I have seen over the last year or so. And so with the European Union actually pushing forward with its own EV supply chain initiatives through the spending of literally trillions of euros, I think Quebec and North America overall are no longer just competing with China for capital and market share. We're also competing with the Europeans. And so separate supply chains for certain industries such as PPE or critical materials are a real possibility over the next decade, and I would argue are likely to happen in some form sooner rather than later. In the West, we have the capital. We have the deepest capital markets arguably in the world. And we actually have rare political will. I think the only thing that I see here in Washington, D.C. that Republicans and Democrats can agree on is that China is the bogeyman, or they're the bad guy. And so I think the real challenge now is just making sure that we have the patience to see this transition through. That's really the only outstanding issue. And so those of us who focused on battery metals investing in recent years have been discussing this potential for a structural shortage of material, not just sort of a cyclical boom and bust, but a structural shortage, which really underpins, I think, any permanent shift towards electrification. So in that vein, it's actually been encouraging to see the amount of capital raised in the sector, much of which is actually not SPAC related. And by the way, just with respect to the sort of SPAC phenomenon, something I hope we can chat about today, about $93 billion has been raised across over 300 SPAC deal structures just in 2021, 4 months into the year. For the sake of perspective, that actually is well ahead of the $80 billion that was raised for the entirety of 2020. And so more capital, I would argue, is going to be needed for the electrification supply chain, in particular the mining piece, because much of that SPAC capital has gone downstream into charging infrastructure or EV players as well. And so, look, finally, just to finish up, once we've established the why for building or rebuilding supply chains, the how is going to become increasingly important. And so I think this speaks to this newfound emphasis on ESG goals across the battery metals industry. Turbocharged growth, opaque pricing dynamics, and oligopolistic market structures have really left battery metals development to a relatively few companies and also a few countries. And so for the industry, I would argue, to really grow to meet surging demand for batteries to serve the EV and renewables markets, the origin and the flow of these materials, such as lithium or rare earth elements, is going to need to become a lot more transparent while also keeping a lid on costs. And that's going to be the next sort of, I think, domestic source of tension, how we get all of this built and manage costs and do it within a relatively strict ESG framework. And so more relentless focus on projects that adhere to a strict ESG criteria, I think that will dictate who the winners are going to be in terms of getting capital under their belt. But I think it's important and it's incumbent actually upon both the public and the private sector to coordinate efforts to raise and deploy capital in an efficient and an effective manner. And so, look, the bottom line here is that to hit even modest electrification goals, say of 10% EV penetration by the middle of this decade, we're going to need a lot more material. I think the consensus, for example, for lithium is a tripling of demand just in the next 4 or 5 years. And so that new supply is going to have to come from existing players, new players, recycling, and also, I think, a leveraging of technology. And so this is all necessitated by the factors that I mentioned earlier, in geopolitics, supply chains, and also in ESG. And so while the demand appears to be there, I think a coordinated effort between the public and private sectors, which is going to focus on R&D as well as bringing new supply on stream, is really the optimal way to ensure supply from the likes of Quebec, from Canada, or other allies. And so with that, I will step off the soapbox and the podium, and I would like to invite the panelists to come on screen. Okay. Are we all there?
Yes, I'm here.
Okay, perfect. I think we're all here. Okay, great. Well, we'll go ahead and jump in, but just so the audience can get an idea of who is on the panel today, joining us via phone is Mr. David Hammond, yes, Mr. David Hammond, Senior Director, excuse me, I've got my names mixed up here. David Hammond, Global Head of Metals and Mining at Goldman Sachs. Mr. Amyot Choquette, he's the Senior Director of Mines at Resources Quebec. And last but not least, Philip Ho, Managing Director at Long State Investments. Thank you all for carving out the time to have this discussion today. So look, I want to keep this as sort of broad as possible. As we had discussed, I really welcome audience participation and audience feedback. And given that we're talking about critical metals, certainly with respect to Quebec, but maybe just more broadly, the theme around critical metals and the boom and the bust phase, I guess I just maybe want to start off with a broad question here. I'm just interested in the panelists' thoughts on critical metals. It looks like, we are in a boom phase here. You're starting to see a little bit more M&A, at least in the audience, or excuse me, in the lithium side. Maybe David, can you start off and give us your thoughts on what you're seeing across the critical metal space, and then have the other panelists maybe join us with some thoughts?
I'm happy to. Thanks, Chris. So I guess just to sort of paint the picture, 12 months ago, 24 months ago, you asked how much time I was spending in my group within investment banking at Goldman, how much time we were devoting to battery metals, critical minerals. As a group, I'd say, 10%, 15%, and it was less focused on battery metals as a group per se, and more about, did we have a nickel project we were working on? Were we doing something in lithium, et cetera? If you fast forward to today, I'd say the group globally is probably spending closer to 50% of its overall man hours working on different initiatives and opportunities, both in the strategic side, M&A as we think about it, or in capital raising in one critical mineral or another. So that would include certainly nickel, lithium, cobalt, rare earths, and I'll even exclude copper for the moment, which is a battery metal, but obviously has a lot of other important uses as well. So that's one thought. Another thought is, what's clear is the availability of capital has gone up for battery metals opportunities, and that's both with respect to public companies where you've seen share prices go up. The cost of capital is going down. We're seeing that with public companies. We're seeing that with private businesses, with development assets, with producing assets. So I sort of illustrate it as a rising tide, in effect, where the opportunity set, at least from an investment banker's perspective, has grown very meaningfully in the last 6 months. So it's a critical narrative, and it sort of transcended just the metals and mining industry to become a big theme, just sort of across general commerce. So the last thing I'll say, and I want to hear what my co-panelists say about it, is it feels like rather than sort of a cyclical moment in time where we're going to see a lot of activity and then things may calm down, to me this feels much more structural and secular and long-term in its orientation. So it's not to say I think commodity prices are going to stay high indefinitely or necessarily go higher. I am bullish, don't get me wrong, but I think we're in a period now, and I've been doing metals and mining banking for more than 20 years. I think we're in a period for this cohort of commodities where we're likely to see very strong consumption for a substantial period of time. We're likely to see repeated struggles for demand to meet that, struggles for supply rather, to meet that demand, although that will vary across commodities. So I think on a relative basis, we're going to see a very meaningful period of strength. I wouldn't even say for years, it could be for decades. again, with ups and downs in between. Let me pause there and defer to others as well on the same question.
Fantastic. Philip, you care to share some thoughts here?
Sure. Once again, thank you very much for the opportunity to share my thoughts with you guys, my fellow panelists. I do agree with what David just said. In a way that we think there will be substantial momentum in terms of demand side. We look at obviously the growth in battery metals, critical minerals. Driven by a lot of different factors. Everyone talk about EVs. That's certainly a big part of it. But there are other applications that are significantly important. To the industry. They call it the fourth industrialization itself. In terms of storage and making a lot of these technology much more efficient. By utilizing these critical metals. So there are a lot of demand to it. The question is, pricing, is going to be a big part to it. We've seen, last year, as David mentioned, about a year ago, he spent about 10% of his time, looking into battery minerals and, this type of materials. Nowadays, a lot more, at that time, I still remember, we look at, spot germanium price, being about $400. You look at, lithium carbonate, probably about $7,000, $8,000 at the time. And now we look at that, over, $12,000. So, there's certainly a lot of pickups, in terms of the prices. And what it does is that it does drive a lot of the investments into the sector, and Chris, you mentioned about that, there are a lot of monies that flow into these sectors. On the upstream side, we see about roughly about $4 billion, being put in. The majority of that in the lithium space, go into the existing producers. I think over $3 billion were, thrown into the existing producers. Many of them are the big guys. Earlier this year, we look at Albemarle, just raised, over $2 billion, on that. So, these are some of the things that we see, on the financing side. There are definitely a lot of money that throw into the sector, which is a good thing. Another thing that Chris, you mentioned about is specs. Specs, obviously, there are a lot of money on the sideline that could potentially be used, to deploy into the upstream side of this sector. On exploration, development of some of these mines. But then, I want to focus more also, on the downstream side as well, because, there are significant opportunities on that as well. When you talk about critical metals and, chemicals, you're not just talking about, on the upstream side, the supply of the metals. That certainly is a very important part of that. But, when you talk about the cathode chemistry, what actually goes in there, is cobalt still going to be a big part of the batteries in the future? How that may actually affect the supply chain itself, and where do cobalt come from? You talk about DRC, on upstream, but then basically the chemicals 100% come from China. So those are the kind of things that we need to address from a supply chain standpoint, from an end user standpoint, from a customer standpoint. How do you get the constant supply in the future without the potential of being disrupted? So I think there will be monies that will be spent on the downstream side as well, together with the upstream side, to make sure that the security of the supply will be ensured in the future, and the money could come from private investors, could come from customers, could come from government agencies, to ensure that these critical metal supply will be secure in the future. So on the financing side, those are the kind of things that I generally observed. There's another very interesting thing, through this pandemic, is that we see a lot of consolidations going on. Let's say within the lithium sector itself. I think one of the things when we look back, back in 2007, 2008, when you see the first super cycle, if you will, is that a lot of money throw in, to these exploration projects, but then the price went up a lot, and then it came back down. But then now with the consolidation of the sector, the supply side itself is much more controlled. So what that means is that, there need to be price incentives, for the price to go up, for supply to be able to come out, to address that. So I really want to hear, what my fellow panelists will say about that as well, and how that could potentially affect your view on the super cycle coming up.
Great. Amyot, how about your thoughts on sort of the critical metals theme and the thesis, and maybe tying Quebec into it and what's going on up there?
Yeah, thanks everyone for having me to this panel and share my thoughts. I think, well, I agree with my co-panelists. I think it's a long-term market that we're seeing. You see all jurisdictions that are trying to reduce their GHG emissions. They're turning to green energy. Electrification of transport. So, and you see car makers that are have announced that they'll produce EV vehicles in a number, only EV vehicles on a certain number of years. So demand for critical minerals will stand, that's for sure. Of course, there will be some fluctuations like any other commodity or metals. But for Quebec, I think we have the resources. You've heard the minister this morning. I think the actual government and even the previous governments were really supportive, first of mining, but the electrification of transport and all the battery materials value chain. So for us at Investissement Québec, we're there to support projects in Quebec to supply the demand of these critical minerals. We manage more than 1.5 billion, a portfolio of more than 1.5 billion dollars to support these projects, and we don't want to just be at the in the upstream in the mining part of it, but we're trying today to attract players in the battery materials value chain. We want some pre-cam producers, cam producers, cell manufacturers. We have green energy to supply the power necessary to do that. So I think it's for Quebec, it's very positive, and we definitely want to play a role in this, and we will. Our premier keeps saying that he wants Quebec to be the battery of North America, and that's what we're trying to do.
Excellent. Okay, that's great. I think way to kind of set the stage. And David, I want to come back to something that you said. Clearly, the financing angle here is really a crucial component. And you said something that jumped out at me that I wanted to explore a little bit. You said you saw the cost of capital declining and falling. And I'm just wondering, what's behind that? Is it just the fact that there's an enormous amount of liquidity in the system trying to find a home? Is it the SPAC phenomenon? Is it green growth, sort of largesse from governments? I mean, what do you think is behind this idea that the cost of capital is declining for these projects?
That's a great question, and I'd say to some degree all of the above, right? I don't think it's one single factor, but I think each of us so far have shared a view that we think the strength in battery metal commodities has some real staying power. And, if you think about the typical cost of capital for a mined commodity, it'll necessarily incorporate the view that, within a cycle, there's risk and volatility and there's weaker parts. And I think to some degree, whether it's equity or debt capital, new sources of equity or debt capital that are coming in, whether it's through SPACs or just the public markets or private providers, whether it's equity or debt, I think they're taking a point of view that the rewards are potentially strong in investing in these projects, and perhaps the risks are a little lower because the underlying, if you will, has some real staying power. It's not without any risk or volatility. It just may be a mitigated risk or volatility because the demand picture is so strong.
Got it. Interesting. Any comments from the other panelists on sort of the decline, or what you're seeing with respect to cost of capital?
Well, I think what David. Go ahead. What?
Go ahead. Sorry.
Go ahead.
Philip, why don't you start?
I think one thing that Chris, you touched on earlier, about the liquidity profile in the market, that certainly provide a lot of um, uh, momentum, in this financing, and that caused the cost of capital to actually go down. That's a big part of that, because we're pumping a lot of money into the economy right now, and a lot of people like to invest in the growth sectors, and certainly it is a sexy thing to do, to invest in anything green or anything that has some kind of high growth profile to it. So I think that actually helps to cost the cost of capital lower, in this sector.
Okay. Amyot, any comments there?
Yeah, no, I think, well, like I said earlier, jurisdictions are focusing on, reducing GHG emissions, and funds or pension funds, they're all looking to invest in that sector, and as well liquidity is a big part of it, I think. But on the long term, it's been proven that investing in green technologies, it pays. So I think it all comes together, and brings more money to that sector, and cost of capital reduces.
Interesting. Okay, that's great. Thank you. Let's see. There are a lot of different directions we could go here. I guess I'd be interested, maybe if you want to shift now, we can always come back to the financing because it is crucial, but the focus on ESG. Okay, I feel like in the mining space, every company has a page or two in its PowerPoint devoted to what they're doing to be responsible stewards of the environment. But now it seems like with governments getting so much more invested financially and otherwise in terms of carbon reductions and decarbonization, and really forcing a lot of these mining companies to think hard about CO2 emissions along every step of the supply chain. How do you see mining companies balancing increasing production and lowering costs while adhering to increasingly strict ESG criteria? How do you think that sort of plays out? Philip, do you have any thoughts maybe to start off? Or
Yeah, I think ESG is a very important part, in terms of corporate governance. In mining companies, just like any other companies, it is a very, very critical part. And over the time, especially over the last year, there's been a lot more talk about it, from private initiatives to government intervention and their opinions on ESG itself. And I think companies are also taking steps do it to ensure that their customers will be happy with their ESG efforts. One of the very good example was I mentioned about a company in Quebec, Nouveau Monde, for example. They're rolling out their electric fleet for mining. That's a very, very unique concept, that I've obviously learned that, and I thought it was what a fantastic idea if you think about it. Obviously, Quebec has a very unique situation whereby the electricity cost is low. You're talking about like 4 cents, sometimes even 3 cents if you buy in large quantity. That helps. But then they are selling their products to end users that are in EVs, battery makers, anode material makers, for example. They will look into ESG, and they will look at they would choose a preferred vendor that actually commits to ESG. And the fact that if they can produce a product just as good as anyone else, but they have this additional edge of the ESG content to it, that would really help. So that's why I think that's a critical part, is to make sure that you engage your customer to it, and also you get government support to it as well. So that I think is important. And I think having a North American jurisdiction, in Canada, in the U.S., obviously in Canada, including Quebec, you can actually observe some of these ESG initiatives a lot easier than dealing with somewhere far away, like in China, where the check and balances would be a lot less, or if you talk about mining project in, let's say, somewhere in Africa, Central African Republic, or other jurisdictions, it's going to be a lot harder for anyone to do the kind of checking and confirmation, that they're in compliance with ESG. So that, I think, is another way that we see Quebec is a very, very good jurisdiction for an ESG, certification.
Thank you, Philip. You're selling Quebec as much as I would like to sell it, and it's glad to hear it from someone else. But I think for us, Investissement Québec, we're a government development agency. We act as a financial arm of the government of Quebec. So ESG is in the forefront of our investment criteria. We're supporting projects like Nouveau Monde Graphite, like Philip just alluded to. It's electric mining fleet. That's what type of companies that we want to support. Like I said, it's in the forefront of our investment criteria. So and it will increase over time. It's not just in Quebec, I guess. Like earlier, I alluded to pension funds. They're looking to do the same as well. ESG criteria are getting higher on their list of investment criteria, and I don't see that changing.
Philip, you brought up an interesting point, and I want to explore. I want to bring David back on this, but you were talking about jurisdiction and jurisdictional risk. And David, I'm curious about your thoughts from the mining M&A perspective. How do you view and how do you handicap jurisdictional risk? Look, I mean, it's no secret that lithium is not rare; it's found everywhere. But how would you look at, for example, a lithium project in Africa or Russia? And these are just random examples, but relative to, Canada, obviously, maybe the discount rate, there's an increased, level of risk there. I'm just curious how you and your team view jurisdictional challenges.
Yeah, I mean, it's a great question. It's a complicated one to unpack. And, maybe the lens I'll look at it through is our client base, right? And I'd say our clients, our investing clients, our M&A clients have a varying appetite, to be sort of direct about it. We've got, a group of clients, whether it's battery metals or otherwise, who need to be in OECD jurisdictions, and they they'll have strict policies not to go in emerging markets or less well-developed markets, or frankly, in countries where there may be less structure, less history in mining, less confidence in the stability of an investment framework. But equally, we've got some clients who are more willing to take risk. Oftentimes that view, comes with a requirement for better returns. So I think it's sort of pretty typical. What I would say for sure, and this is sort of universally held, places like Canada and Quebec in particular are definitely appreciated as the best places to invest in extractive industries and certainly battery metals in the world, bar none. And while we might have clients that are willing to go to more difficult places in Africa or South America or Asia, everybody would again unequivocally agree that Quebec and a few other places in North America, maybe Australia, are the ideal jurisdictions around the globe to invest in battery and other metals.
Excellent. Thank you. We had a question come in here from the audience, and I think it's an interesting one because we tend to talk about these big picture issues, valuation, ESG, what have you. One of the attendees is asking, can you provide a quick primer, or can you define a critical metal? So I'd actually be interested, maybe Philip, if you have an idea, how do you define critical metal?
That's a good question. I guess.
Why don't you give it a shot?
Yeah, with I guess geopolitics, I think some of the metals or minerals are supplied in a large percentage by China, and some of these minerals are critical for some industrial uses, for batteries or other. We can think about rare earths where they're used in magnets, they're used in aerospace. So these, I guess, these minerals are critical to some industries, and on a broad sense, I would, define these critical minerals like that. They're useful in an industry, and the supply is controlled by one country, mostly China. So
Typically, right?
they become
China.
Yeah, they become critical to jurisdictions that don't have them.
Interesting. Okay, excellent.
I agree with
I think
Amyot.
you've rejoined
I think
us.
it's a political definition. Sorry, I was going to say,
Yeah.
I think it's a political definition more than it is a commercial definition. And, in particular, if the way I think about it is, it's a commodity that has an important use domestically, and it could be the U.S. or it could be elsewhere, where there are risks around the supply of that material, either because of Chinese dominance or maybe just a natural scarcity. And by the way, that could be an upstream scarcity, but equally, as in rare earths, it could be a processing issue where some other country, China in the case of rare earths, dominates the midstream or the processing in rare earths, and that product, the use of that product, has some sort of strategic importance to a country, and that could be industrially, but it could also be from a defense point of view, or both in some cases. So, I don't know, I think it's a bit of a mosaic that helps you define what a critical or strategic mineral is. It feels like there are some commodities that are universally agreed to be in that bucket, some others that are a little cuspy, but there's obviously a lot more focus on critical mineral. And by the way, I think the best example is battery metals. And, I think the Chinese dominance and the lead, in effect, that China has in the supply chain here has, and these aren't my thoughts, these are other people's thoughts, very significant geopolitical implications. If China becomes energy independent because they've electrified quicker than the rest of the world, that has massive political implications across the globe.
Sure.
So you have to back it all the way up to the battery materials to get to the very beginning of that. But there is a logical chain back from energy independence in China and what that means geopolitically to where they are in terms of sourcing battery metals and other critical materials.
That's an excellent point. I want to explore that maybe just a little bit more, because it really speaks to this idea and this theme of decoupling. And I think, again, as I sort of mentioned in my opening kind of preamble there, it's a situation where we kind of woke up, and whether or not it was PPE and medical equipment or critical materials, I think the political establishment and the commercial establishment here in the West kind of woke up and said, wow, there are multiple really crucial industries where we are dependent on one country or one part of the world. And so that really, I think, lit a fire under this idea around decoupling. But, the more I think about it, it seems like the Chinese might actually be trying to decouple from the rest of the world because, and I think what you're sort of getting at and referring to is exactly that, gobbling up all of the upstream portion of the supply chain, to Amyot's point, building out the midstream portion of the supply chain to really sort of tip that balance of power. And so I guess, to kind of bring this point to its logical question, is decoupling realistic? There's been a lot of talk about deglobalization and it's over and so on and so forth, and for a number of different reasons. But, I'm just interested in the panelists' thoughts. Is decoupling here in the West, is this something that is even realistic, say, in the next few years? I don't know who wants to start off with that one. Maybe Philip, do you have any thoughts?
Absolutely
Philip,
not.
I think you're on mute. Oh, sorry.
Okay.
You're. Can't hear you now.
Is it okay now?
Yeah,
Yes.
yeah, you're good now.
Okay, great. Sorry about that. So in the near future, no, there's absolutely no way that we can decouple in that way. Because we depend on a lot of materials, a lot of chemicals, that come from that part of the world, especially China. And China is not afraid to use that as a way to ensure that we will agree to some of the demands that they have. They try to obviously use rare earth as a negotiation, some kind of negotiation power with us, limiting the export of rare earth. We've seen that they have also not willing to they're willing to use trade as a way to negotiate with other countries, especially weaker countries like not weaker, but I mean countries that depends more on the Chinese market, just like Australia in terms of coal export. So
Commodity exporters.
I do agree with what David just mentioned. When you talk about critical metals, it is more of a geopolitical definition than the overall supply in a global sense. And then in terms of decoupling itself, we really need to have the will and the ability to push through that. To build out, for example, the supply chain within the U.S., within North America. That needs the political will, that needs a lot of money, that needs a lot of incentives. I don't know if the current administration or future administrations have the ability to do that, and if they have the will to do that, and if the voters in the U.S. would try to put someone like that, regardless of the cost to it, into power. That's my concern about that, and that's something that we need to address, but it's not something that we can easily address.
Understood. Amyot, any thoughts? You've talked a couple of times about Quebec kind of being the battery of North America, which speaks to building out your own domestic or even a regional supply chain. I mean, what obviously maybe Plan Nord factors into that. But maybe if you can talk a little bit about the province's thoughts on what this means for decoupling and self-sufficiency.
Yeah, well, yeah, definitely. I think I agree with Philip. It won't happen on a short-term basis, but we're definitely want to play a role. Quebec wants to play a role. I think we have all the minerals, or most of them, and to develop the supply chain will help decoupling. But I guess you look at the EV market, Asia is much more in advance than we are, Europe as well, but we're trying to bring that to North America, and the EV market will increase by decoupling is not just EV market, but it touches other markets as well. But we need on a long-term basis North America or European countries as well to be independent from Asia on the supply side, and Quebec we're there to play our role, but like Philip said, a lot of money will be required. There seems to be I guess political I guess willingness to do that, but will we see it rapidly? That's another question. I'm optimistic. I'm optimistic, so I hope it will come faster than later.
Hope so too. We just had a question come in from the audience, and actually it pertains directly to Quebec. So while I've got you on the stage here, I'll go ahead and ask it, I should say. Does Quebec have the workforce to fill the positions that will be needed? How is it preparing for the human resource requirements of the future?
Well, yeah, I think we have skilled workforce. Of course, if everything would fall down tomorrow morning, it come in one shot, it would be a challenge. But we definitely have a skilled labor force, and with immigration and population increases, and there's a lot of engineers, a lot of skilled workforce to go through this, and this will happen over time. So I'm very confident that the workforce will be there to supply the labor for these projects.
Interesting. We're really
just chiming a little bit on that as well.
Yeah.
I absolutely agree with Hammond and on his comments. We actually look at the graphite industry up in Quebec quite a bit. We look at not just graphite but also graphene as well. I'm so impressed with a lot of the engineers that I talk to. The understanding of the industry, technologies, is absolutely surprising. Of the kind of knowledge that they have, and also the kind of technology developed by Hydro-Quebec, the patents that they have, a lot of them are really, really applicable in terms of, creating a real industry, a graphite industry within Quebec itself. So we were extremely impressed by that. One thing, that was just mentioned about immigration. We also see a lot of skillful workers, from China and, engineers from China and other parts of the world, going into Quebec, and they bring in tremendous, knowledge and experience, to this sector as well. So, we see that, it is a real opportunity, for Quebec companies to take advantage of that and, certainly develop, some real technologies to it.
Okay, great. We're rolling through this hour. I did want to talk about one specific aspect that we have not yet really delved into, and it's about valuation and how to think about the valuation of critical metals or battery metals companies, and also maybe a state of the market. You have this interesting situation where you've got a company like MP Materials, which is now, I think, public for the second time in its life, and it's got a pretty robust market cap. But David, to your point earlier, I mean, these are companies that are just mining the material. There's no separation capacity, at least not yet here in the United States. So, David, I'm just curious. Maybe we can start with you. When you look at the battery metals space, and some people call them commodities, some people call them specialty chemicals, and as such, maybe they're deserving of a higher premium or a higher valuation. How do you think about valuation for these critical metals companies?
Yeah, good question. Well, to be very frank about it, right now, to some degree, it's a moving target, which is to say it's sort of a developing story, because, and this is the other side of the coin from our earlier discussion on cost of capital is valuation, right? So I think there's been a shift in how equity investors, and let's focus on equity investors in particular, are willing to think about sort of reward and risk. And I think the perspective that equity capitals or providers are bringing to the table right now is that we're going to see higher prices for longer, and they're willing to, in effect, bake that into their investment views. And therefore, you do see some public companies trading at, call it, multiples that are significantly higher than what we've seen traditionally in the mining world, even for commodities that have had sort of a better supply-demand picture. I mean, to put it directly, we tend to see multiples in the mid to upper single digits on 1 year forward cash flow or EBITDA. We're now seeing high single digits, and in some cases into the double digits, which does feel a lot more like specialty chemicals. But again, I think the critical question is what's behind that, and what's behind that is a fundamental view that pricing is going to be stronger either will maintain currently high levels, or there's even upside, and that we'll be able to sustain those high levels, and therefore the profitability in these businesses for a significant period of time. Two other factors. Many of these companies have big growth plans in their profitability. So I think there's a willingness to, in effect, for investors to value these businesses on a forward basis, 2 years, 3 years, even 4 years forward. And that's to the last point on just the availability of capital. There is a lot of liquidity in the market. While I think the SPAC dynamic is part of that, we've only seen a very little bit of SPAC activity in sort of critical metals and materials. You mentioned the one company. There may be another one or two that haven't even closed yet, i.e. SPAC demergers. But there's a lot of other capital, public and private, that's very eager to invest in these businesses. And again, I think the bottom line is what you're seeing is, in effect, an underwriting of strong profitabilities on these businesses on a less volatile basis than you've seen historically, with upside based both on pricing and based on these businesses' ability to grow their production bases.
Interesting. And what do you think that means for M&A? I mean, we just saw the Orocobre and Galaxy merger announced last weekend. I mean, given this really, really strong kind of backdrop, do you see more sort of M&A consolidating throughout the course of this cycle, or is it something where, we could go back to the last commodity super cycle, for example, and you're going to see sort of like Glencore Xstrata type mergers that are unfortunately ill-timed? But, I don't know. Just any thoughts there?
I'm happy to start, and others should comment.
Yeah.
I think it really depends on the particular industry line. I'll give you some examples. Cobalt's a critical material. Do I think we're going to see a lot of M&A with cobalt assets in companies? No, because of the way the industry is structured. It's oftentimes a byproduct. There's not a lot of necessarily a lot of actionable M&A. That doesn't mean there'll be none necessarily. Do I think we'll see more in lithium? Probably, because it's a more fragmented business. I think with a greater opportunity set, and the transaction in Australia announced earlier this week is a good example of that. I would put, rare earths and even nickel probably more in the cobalt camp. But then if you want to include copper as a critical material in a battery metal, there's a fair bit of fragmentation and the possibility for consolidation in copper. So I think it really depends on the specific commodity. Even if you have an opportunity set for M&A, big questions around the right deal structure and valuation points. We have had M&A in the metals and mining sector historically, much of which has been done at high parts of the cycle, some of which has been regretted going forward because of deal structure and timing. I think those lessons have been well learned by players. So when you see stock for stock merger of equals type transactions like the one with in Australia and in lithium earlier this week, that's a good example of kind of risk adjusted win-win potential opportunities where the risk and the reward is sort of measured and carefully incorporated. So thematically, I think stock for stock makes sense. Low premium makes sense. That doesn't mean we're not going to see cash deals at premiums. We're going to see some of those as well. It's kind of a mix and match thing. So I can't give you a black or white answer on that one. It's a very gray answer. Kind of really depends on the specific circumstance.
Great. Philip or Amyot, any thoughts on M&A and sort of how you see this playing out?
I certainly see consolidations going on, and in a way that there will be especially in the lithium sector that we're seeing that some of the companies existing producers they become bigger. The Galaxy deal that you just talked about with Orocobre is one of them. The other one is PLS with Altura, and that is a cash deal. Back then obviously they were buying that from restructuring type of situation, but then there are plenty of capital available for them to be able to raise the money to complete that. So that I think is also helping on the M&A side.
Amyot, any thoughts?
Well, I think my colleagues covered it, but yeah, I see
Yeah.
there's always been consolidation over the cycles, and I think in some materials there will still will be some consolidation. Companies want, especially in markets that are forecasted to increase greatly, you want to remain, you want to keep your market share, and so yeah, I think there will be further consolidation over the coming years.
Okay, listen, we've got about 4 or 5 minutes left before we have to unfortunately end this. I know we could go on for longer. I want to end with a question for each of you, and I'm really interested in your thoughts. What do you see as the biggest risks and the biggest opportunities in the current environment? That's obviously a very broad question, but whether or not it's commodity specific or infrastructure or what have you, what do you see as biggest sort of risks and opportunities? Maybe Amyot, you wanna start off on that one?
Yeah, well, I guess on the opportunity side, we see the green economy. It's definitely that's the biggest opportunity that there's in front of us. It's We can diverse our economy. That there's new minerals that are supplied that is needed to supply that green economy. So I see tremendous opportunities in that, not just in mining, but you can see green hydrogen, and that's an opportunity that will come, and that green economy will have an impact on mining. We talked earlier about the Nouveau Monde Graphite. They're going full electric, so that's other opportunities that will arise in the mining sector. As for the risks, I think people have to remain disciplined. We've seen over the years some cycles. There's a lot of we've talked about the lithium market earlier. That there was a boom, then a bust, and then a second boom, and so this could be a risk for some companies if they're not too careful with their their growth plans and the financial backing that they have.
Great. Philip, threats and opportunities.
I do agree. The green economy, and also the demand for storage, and other ways to make it's Earth Day today. So to make a greener world, a better world, that certainly is something that we can capitalize on, and that's a great growth opportunity. In terms of the risk, there are a lot of competing technologies out there. Some of them are complementary to each other. Some of them are competing with each other. Obviously, for in battery side, there are different cathode chemistry, there are different design. From an investment standpoint, how do you mitigate your risk, by investing in the right opportunity? That's one thing that you need to think about. And other than battery itself, there are other additional alternatives, such as hydrogen fuel cells. And those are the kind of things that you really have to do your homework, because there's so many new things coming out right now, and you really have to be able to pick the right one, from an investment standpoint. So those are the kind of things that you need to manage on the risk side.
Thank you, David. Thoughts and I guess opportunities and risks.
Yeah, listen, I agree with Philip and Amyot. I think there are risks around backing the wrong commodity, because battery chemistry leans more in one direction or another. I think they're a very different kind of risk. Maybe you call it more of an opportunity. Is the supply just there? We don't have on a global basis enough of the geology to support a commodity or another, because some of them are fundamentally scarce, or we just can't get projects built. in a sensible way. And then we have fundamental supply shortages, which sounds bullish vis-a-vis pricing, but then, technology is going to have to adapt. So that's another form of risk. So I think the opportunity set here is really very, very substantial. I think electrification we're kind of on a one-way street here. The destination is a really impressive one. The only question we have is the pace and the exact journey. So I think the opportunity set's massive. But per the first point, got to be really selective about picking what you're gonna back, because some things are going to work really well and some things will work less well.
Wonderful. Well, listen, that takes us to the hour. So I want to thank each of you for your time and your thoughts. I've certainly learned a lot over the last hour, and I'm sure the audience has as well. And of course, thanks to the OTC markets and Murdoch Capital, TAA Advisory, and of course the province of Quebec for putting this on to, presumably what we think is at kind of the first or second inning of this whole shift. So thanks very much for your time and attention, and hopefully we'll speak soon.